Hello, everyone, and welcome to part two of Business Financial Literacy for the Independent Stylist. In part one, we talked about the importance of setting up a business legal structure for your business. We talked about the types of structures that work well with independent stylists, and we also talked about the importance of setting up a business legal structure. We also talked about the importance of understanding the structure that you choose. In part two, we're going to be talking about setting up an accounting system and why it's important to do so, even though you are an independent stylist. Now, when I talk to some independent stylists about the importance of setting up a bookkeeping system, some of them simply don't understand the reason why it's necessary. They feel as though they are independent stylists, in other words, they work by themselves, and there's no need to set up an accounting system. And that's usually because they work directly out of their bank accounts, which can be really risky if you ever start having cash flow problems. So today I'm going to be talking about a few reasons why it's important for independent stylists to maintain their financials, or rather to maintain some sort of bookkeeping system. Now, you know companies like Nike, Coca-Cola, Great Clips, all these larger businesses, you know they maintain financial statements, because if they didn't, they more than likely will not be in the positions they are right now. Just because you're not as big as some of these companies doesn't mean that you don't need to maintain your financials. You need to maintain your financials for the exact same reason they maintain theirs. Of course, it's on a smaller scale, but you still need to do so. So now let's look at some reasons why it's important for an independent stylist to maintain their bookkeeping systems and their accounting systems. So the first thing is your business needs to generate financial records so that you can have access to the three most important records that any business needs in order to make important decisions. Now, these statements will allow you to budget, it would allow you to track your progress, and more importantly, they're going to allow you to make business altering decisions. So these are decisions that can alter the trajectory of your business, no matter how small the decision is, okay? Your financial statements are your business's GPS. Without them, you have no idea where your business is or where it's heading. So think about driving a car blindfolded. How do you think that's going to end? It's not going to end well, okay? You can't see where you're going, so more than likely, you're going to wind up crashing into something. That's how it is when you are operating a business without financial statements. You have no idea where you're going, and you're just hoping that you land somewhere that's not going to be harmful to you or your business. So let's start out by asking ourselves the following questions. So as an independent stylist, how do I build a plan that is flexible enough to deal with unforeseen circumstances? Unforeseen circumstances can be anything. It could be what we're going through right now with COVID. Nobody saw that coming. It could be personal unforeseen circumstances. It could be anything that you just did not see coming. Another question you want to ask yourself is, how do I build a plan to ensure that not only am I always ready at tax time, but that I'm also taking advantage of all of the deductions that my business is entitled to? When you don't maintain your financial statements, I can almost guarantee you that you are probably missing out on tons of deductions that you just don't remember. I mean, because when you're going through your bank statements, when you use the bank statements as your bookkeeping method, when you go through your bank statements, you're going to see several transactions that you will not remember what it was that you purchased. So if you purchased an item in, let's say, January or February or March, well, by the time tax time rolls around, which is the following April, and your accountant asks you, okay, well, what was this purchase? The answer is, I don't know. And when I'm dealing with clients who provide me with bank statements, if they don't know what something is, if they don't know what they purchased, automatically I put it under owner's drawer, which means you're going to wind up paying tax on the item, even if it was an expense. But if you don't know what it is, then I can't record it as an expense. Okay, so I try to discourage the bank statement bookkeeping system. So the first step to building a plan is by systematically tracking what you make and what you spend. That's where it all begins, and then you build from there. Now, you can't achieve this by using your bank statements, okay? Understand that whether you are a one-man operation or whether you are a large operation, there are some things you can control, but then there are certain things that are completely out of your control. And the only mechanism that we have to handle things that we can't control is to plan for them, okay? But in order to do that, we have to put certain systems in place. So this is where your financial statements come into play. Use your financial statements to take the temperature of your business so you can understand what's going on in your business. So in order to do this, there are 3 statements that you should familiarize yourself with. One is the income statement, your cash flow statement, and your balance sheet. And I'll talk a little bit about, I'm going to compare how these statements line up to, let's use a vehicle, for example, because we all understand what our cars can and can't do and what's required to keep our cars maintained. Okay, so we'll use that as an analogy for your financial statement. So your income statement, okay, is like the odometer on your car's dashboard. It tells you exactly how fast you're going, if you need to speed up or whether you need to slow down. So basically, it's going to tell you how much money you're making. Are you making enough money to keep your business going? Or are you robbing Peter to pay Paul? So your financial statement is going to give you a good idea of what's going on in your business. Do you need to change something? Do you need to change your strategy because you're not making enough money? Or are you making great money? And because you're making good money, you want to keep doing whatever it is that you're doing so you can continue to make money. Your cash flow statement is like the gas in your car. If your car's gas gauge isn't working, you won't have any idea how much gas is in your car. And the next thing you know, your car will stop without any warning whatsoever. So if you don't keep an eye on your business's cash flow, your business can come to a screeching halt with absolutely no warning. Now, it's no warning because you weren't looking for it, okay? But we're going to talk a little bit more about the cash flow statement in part 3 of Business Financial Literacy for Independent Stylists. Now, your balance sheet is like the overall health of your vehicle. So before you get on the road, you want to make sure that your car is in good overall condition so that it doesn't break down in the middle of the highway. But your balance sheet tells you the overall health of your business. It's really one of the most important financial statements, especially if you are trying to either buy a business or if you're trying to sell a business. So if you are trying to buy somebody's business, the balance sheet is probably the most important statement that you need to look at because it's going to tell you exactly what that business's financial position is. Do they owe more than they own? Or do they own more than they owe? Also, if you ever decide to sell your book of business, an investor would want to look at your balance sheet to make sure that your business is in good enough health for them to invest their money into, okay? So now let's talk a little bit about gross margin and your pricing strategy. Now, I'm just giving you a few examples of why it's important to maintain your accounting system as an independent stylist. These are just a few. This is the tip of the iceberg. There are other reasons why it's important, but I can't get into all of those, so I'm just touching on certain ones. So without financial statements, you have no idea what your business's gross margin is. So what's the gross margin? Your gross margin is revenue minus your cost of doing business. And whatever is left over after that is what you use to cover the rest of your bills, which then leaves you with your net profit, which is what you use to cover your personal bills. So you really do need to know what your gross margin is, because if you don't, then that means that you are essentially running your business based upon your gross revenue. And if you run your business based upon your gross revenue, you don't really know how much it's costing you to run the business. And therefore, you may have an inflated idea of how much money you're making and therefore how much money you have to spend. And this is where working out of your bank account is not a good idea. It's not a good strategy when it comes to bookkeeping, because when you're putting all that money in your bank account, in your mind, that appears as revenue, money that's coming in. And then you just see the money in your account and you just start spending. But if you don't maintain financial statements to determine what your gross margin is, then you won't really know how much of that money that's going into your bank account is actually money that you can spend on stuff, or whether you are spending money that is otherwise part of your cost of goods, or rather your costs of services. Also, not knowing your gross margin may cause you to keep selling products or services to your clients that you should have stopped selling to them a long time ago, because those particular services or products are actually losing you money. So you may have clients that are costing you money and you don't even know it, but you can't track these things if you don't maintain financial records. If you're a stylist that has a long menu and a long list of items that you offer your clients, you want to know which one of these services is profitable and which ones are not that profitable, because there are only so many hours in a day and you are literally selling your time. And because you're selling your time, you want to make sure that you get the most out of your time that you can possibly get. So there's no point selling products or selling services that really aren't, bringing in enough money to help your bottom line. And all of this data is part of understanding your gross margin. So as a business owner, you should also know how much it costs you to provide a specific service to a client. How much you charge each client for the services that you offer has a direct effect on your bottom line. So the best way to determine how much to charge for a service is by looking at certain data that is found within your financial records. But if you don't keep records, you won't be able to perform these calculations. Now, pricing your services based on what you think you're worth can work against you either way. So either way, as in, if you don't think you're worth much, you're cheating yourself, and not only that, you won't be able to cover your bills at the end of each month, which means that your business can literally fold. On the other hand, if you think that you're worth more than what the market is willing to pay you for your service, that can be an issue in and of itself. That's why it's important to price your services according to what the data tells you. This way, you can stand firm on your prices because you know exactly what you need to keep your doors open and a roof over your head at work and at home. If you don't monitor these things on paper, it's very hard to plan for progress and for growth, or even something as simple as just planning to make ends meet. Now, using the bank statement method for bookkeeping to monitor your business's financial progress will at best keep you in the same financial position for a long time, or at worst cause your business to fail. So I strongly suggest that if you are an independent stylist, that you move away from using your bank statement as a way to gauge your business or as a way to do business, and you start maintaining financials. Whether or not you decide to use QuickBooks, whether or not you decide to use Excel, whether or not you decide to use old-fashioned pen and paper, just whatever you decide to use is okay. Just make sure that you are actually doing it, because you're going to need this information to make very important decisions in your business. Think about it this way. Because of COVID, the beauty industry, or beauty industry professionals as a whole, are now required to purchase additional equipment. In addition to buying protective gear, you now have to also purchase additional supplies to make sure that your salon or your area is sanitized. So I've been hearing questions on social media, or I've had people ask me whether or not I think it's a good idea for them to increase their prices because of this. Well, the question is not what I think, nor can you make this decision by going onto social media and asking what everybody else thinks about whether or not you should increase your prices. The only way that you can determine whether or not you should increase your prices is if you sit down and you crunch the numbers to see how much more it's going to cost you per hour, per service, or I should say, how much more it's going to cost you to deliver each service. And in order for you to know the answers to this question, you have to have data. Okay, where are you going to pull your data from? You're going to pull your data from your financials. So you're going to pull the data from your financials. You're going to look at what you now have to buy in addition to what you have been purchasing. And then there is a certain calculation that you can do to determine whether or not, based upon your current pricing, whether or not it is a good idea for you to increase your prices. And at the end of the day, no matter what anybody tells you what you should or shouldn't do, it doesn't really matter. If someone says to you, oh, don't increase your prices because it's just not fair, or you should increase your prices because after all, it's costing you more money, none of that is a reason to increase your price. You have to look at what the numbers are telling you. If the numbers tell you that, yes, in order for you to sustain and to maintain your business and to stay open, that you're going to have to increase your prices by this amount if your goal is to make a certain amount of money. So it's all a calculation. And the only way to make these calculations is if you have the information to use to make the calculations. And this information, once again, is found in your financial statements. Okay, so that's all I have for part 2 of business financial literacy for the independent stylist. In part 3, I'll be discussing cash flow management for the independent stylist. And if you haven't already, don't forget to join my waitlist so you are one of the first ones to know when my financial membership club for the independent stylist launches. I'm really excited about that. I've been working really hard trying to get it together, and I'm hoping to have it together in another month or so, hopefully less than that. So you can find the link to join my waitlist in the email that you received with this video, or in my Instagram bio, or in the chat or the description box of this video, or on the episode page of my podcast. Thanks again, and I'll see you for part 3 in about a week or so, where I'll be talking about the importance of independent stylists to manage their cash flow. I try to help beauty industry professionals transform their financial life, and not just transforming their financial life from a business perspective, but also transforming their financial life from a personal perspective. Because at the end of the day, you know, what we do for a living is what helps us elevate our personal lives, right? It helps us to save for retirement, it helps us to purchase vehicles, it helps us to purchase homes, it just helps us to go on vacation. Everything that we do in our business lives helps better our personal lives.